Hello and welcome. I'm Steve Clemons, editor-at-large of The Hill. We're delighted to have you joining us for Advancing the America's Economy, the Role of Private Capital. As Americans reel from a pandemic-induced economic downturn, the question of how to bring businesses back from the brink and create jobs is one of really profound significance. We will spend the next hour examining private capital, one of the key drivers of business investment, innovative reorientation, and expansion in the country. At first, the concept of groups investing in companies was non-controversial, but scale and success have in some cases led to massive wealth and some controversies. Private capital can play a substantial role in job creation, but a trustworthy partnership must be established with the public. Today, we'll explore this responsible equilibrium between private interest and public good and examine how it fits into our roadmap for economic advancement. I'd like to thank our sponsor for today, the American Investment Council, for their support of this event. We have a fantastic lineup of speakers to help us get smarter on this topic, policymakers, some CEOs, and leading academics. But before we get underway, a few housekeeping notes, and I always laugh at these. You can well, not at this one. You can tweet us at The Hill Events, at The Hill Events, using the hashtag TheHillInvests. That's a lot of letters, but please do it. We are broadcasting live and we'll be taking your questions throughout the program. As with any live stream, you could experience occasional trouble with the video. Refreshing the page could in most cases fix the problem. I'm going to refresh mine right now. My first guest today is Congresswoman Stephanie Murphy of Florida. She's a member of the House Ways and Means Committee. A former businesswoman, Representative Murphy has been serving in Congress since 2017. Her state has seen an explosion of coronavirus cases in the past few weeks, which will no doubt take a toll on its economy as well. Representative Murphy, along with some of her colleagues, recently introduced a bipartisan bill to expand the employee retention tax credit and prevent further layoffs. Congressman Murphy, thank you so much for joining us. And I know you just wrapped up a vote, rushing back to your office. So really, thank you so much for squeezing us in. Let me just ask you to kind of, solve our riddle today. What's the right social contract when it comes to employers, investment, and these times? We're talking about private capital in firms today. You know that world well. How do you get the social contract equities right? The Congresswoman is on mute, I think.
Sorry about that.
No
thank you so much for having me with you today and for hosting such an important conversation as we look at not just getting through this public health crisis and the ensuing economic crisis, but also as we look outwards towards recovery as a nation. You mentioned in your introduction of me that I had worked in the private sector, and so I really appreciate the different roles that private capital and public funds have in our economy. And even before this crisis, I was a bit concerned about the rising conversation on the Hill and in our public debate about socialism. And I wrote an op-ed declaring, I'm a proud capitalist, but I'm a capitalist who believes that we need to have a democratic capitalist system that is that has a market economy driven by innovation of the private sector, but constrained by guardrails constructed by a duly elected government. And this model, this democratic capitalist model that we've had in the U.S. has helped us build the greatest nation and the strongest economy in the world. And I think it would be folly to abandon it. But the balance between the innovation of the private sector and guardrails from the government is the topic that you're talking about today. And I think in order for us to have a real conversation about what that balance looks like, we have to step away from the rhetoric and not necessarily discriminate about the sources of capital, and allow for that there is a role for government in ensuring that our capitalism works for everyone.
One of the things that this administration did do is it lowered the corporate tax rate, and that we had Democrats and Republicans both thinking that had to happen because the United States was really out of whack with what global tax rates were, and we saw a lot of firms being right. And part of that deal was for private investment to flow back, to come into U.S. firms, and to play a big role. And I know a number of cases where this has robustly happened. Is it your sense that this equation is going the right direction right now?
I actually think that this administration's economic policies worked in conflict with one another. So while they asked the American people to take, a massive debt in providing tax cuts for the wealthiest among us and the largest corporations, they also pursued a trade policy that taxed those very same American businesses and American consumers. And when they pursued this trade policy, what business wanted to come back and exist behind the trade walls that they had thrown up? So I don't think that we saw the benefit of the tax cuts that they had intended, because they had conflicting policy that actually worked in direct and conflict with one another. The other thing I will say too is that with the tax cut that was had, we can debate what level that tax cut should have been and at what rate they should have set it at. But what is not debatable is the giant hole they put into our debt, driving up debt and deficits, leaving us on a less stable financial footing when we encountered this pandemic and the ensuing economic crisis. And I think that is really problematic, because now we are having to spend in order to save lives and livelihood, and we would have been in a better position had they not had such a fiscally irresponsible tax cut.
One of the criticisms of the private capital world, if I may, is that it trades in debt, that it acquires firms, it brings in things, and so the debt dimension creates other pressures on employees, it creates other pressures on whether things stay open or not. In my world, to be quite candid, I look at that as part of the way business works, but I know that that's part of it. When you look at the impact of COVID on this economy, nearly every large company that I know has had to build debt in order to keep cash flowing. So is anything in my equation not right in there? That in that world of debt and needing infusions of capital right now, that the private capital is one of those key sources. The government has provided some of that, like to the airlines, and they've been negotiating about what levels of debt United and Delta and American and others build up. But I'm just sort of, it's one of the criticisms that I don't quite understand, because if they don't have that debt flow, they're going to be bankrupt, right? So that is, particularly in this economic moment, where, as Rachel Maddow would say, tell me where I'm wrong, talk me down.
Yeah, so I think, having worked in the business world, I understand that there is a role for debt and leverage, and that there are a lot of different sources of capital. So I don't necessarily have that reflexive approach towards debt. What I do find kind of problematic in the current situation that we have with the pandemic is that the big lifeline that we threw businesses was through the PPP program. And that really asked small, medium-sized businesses to take on debt at a time when their revenue was dropping precipitously. A small business owner looking at the uncertainty of their revenue streams and sort of the uncertainty that this pandemic has caused about their ability to reopen and return to normal operating conditions, asking one of those people at that moment to take on debt seems counterintuitive to me. I actually believe that in this moment of unprecedented economic crisis due to a public health condition that is at no fault of any of these businesses alone, there's a role for government to provide necessary support to these businesses to get them through. And I actually think it's better done through the employee retention tax credit, as opposed to asking these companies to go out and seek a loan and have a potential debt. I think the other thing I would say too is that in this kind of unprecedented economic moment, if we want to protect American workers and American jobs, I think we should look at them sort of equally. A job is a job is a job. Workers really don't care what kind of company they're working for, the tax structure of the company that they're working for, whether it's public or private, or if its capital is coming from private equity or from the public markets, what its ownership structure is. All they know is that this is a job. It provides them income and access to health benefits that's going to help them get through this moment. And so the fact that here on Capitol Hill, we're trying to make distinctions about, do you qualify as an SBA defined small business and therefore your job is worthy of keeping, or whether you're a business that has private capital in it and therefore your job isn't worthy of keeping. That's a distinction that I don't think the American people are making.
I'd like to just give you a moment to tell us a little bit more about your legislation and how it would actually work.
Sure. So the Employee Retention Tax Credit is already in law. It passed as a part of the CARES Act. And what we're seeking to do in the next round of COVID bills is to expand the Employee Retention Tax Credit. It is a refundable tax credit for businesses that have been impacted by the pandemic. And it would currently what it does is it covers 50% of payroll costs through a refundable tax credit. So it uses all the existing infrastructure that is there between a business and Treasury and the IRS to provide this support. I think in a crisis, it's a wrong time to build a brand new program. This is a program that has been used in after previous national disasters and works. What I'm looking to do in the next COVID bill is to expand it to cover 80% of payroll and to increase the limit to $15,000 a quarter, up to $45,000 a year. That is more consistent with the average payroll in this country, and it also provides for the calibration to provide assistance to businesses that may have a longer runway back to normal. It helps to it helps to keep workers tethered to their jobs and their healthcare benefits, which is critically important in the midst of a pandemic.
Let me just ask you finally, and this is going to be sort of a big meta question. I've really enjoyed talking to you. It's nice to talk to somebody who's actually run a business before and been in that world. But when I worked in the Senate in the 1990s and I did economic policy, and we were looking at companies and why they weren't putting more into health packages for people and why pensions weren't portable, and we were asking people to live in a turbocharged economy, but we weren't giving them the benefits to do that. There was a big divide between publicly held firms and privately held firms. And that's when some of the roots of the private capital world began to come in, and you could kind of look across the board that private capital was actually, on the whole, you saw them doing things and acting more patiently, that there was a greater investment, at least at that time, in workers. And I think we see returns are different. The behavior of private capital and then public firms is different, and the short-termism in public. Is that awareness out there? I mean, Florida is the third state, the third in the ranking of private capital investment. I say it's behind California and Texas. Is there an awareness of that divide between short-termism and long-termism that I also think is part of this discussion today?
One of the reasons why I think it's so important to have members of Congress who have diverse backgrounds is that it takes having worked in the industries and to understand that. For Florida, we have $6 billion in private equity investment. We have over 12,000, almost 13,000 private equity-backed companies. They are creating jobs, they are contributing to the economy, and they do have a different approach to benefits. I think we're going to come out of this COVID experience understanding that we all have a role in ensuring that people have access to health care, and that benefits and things like that shouldn't be a luxury, that they are part of keeping a healthy society and a healthy economy. And I'm hopeful that we come out of this moment where we are exposing sort of the weaknesses in our system with a renewed commitment to corporate patriotism
Mm.
and to doing the right thing for our workers and our economy, because that contributes to a healthier consumer base, and it allows everybody to benefit from this. And whether that is, and I hope to see that kind of patriotism, not just from the private company world, but also from our publicly held companies.
Well, Congresswoman Stephanie Murphy, thank you so much for sharing this. I know Florida's just having a tough time right now, so keep at it. I know that these questions of how to put the economy back together after all this are going to continue to be vital ones, so I hope you'll come back and talk with us again. Thank you so much.
I'd love to do that. Thanks so much. Have a great day.
Thank you.
Stay safe.
My next congressman is Brian Stile. He's a member of the House Financial Services Committee. He's co-chair of the Middle Class Jobs Caucus and the Future of Work Caucus. He was elected to Congress in 2018, and supporting entrepreneurs has been a really key area of his focus. Prior to his time in the House, he spent a decade in the private sector working in the manufacturing industry. Congressman Stile, thanks so much for joining us today. I love talking to members of Congress that have actually been in business. It's sort of cool. So we had Stephanie Murphy. I don't know if you two have hung out much yet, given everything going on right now. But it's interesting to sort of talk about how business works, and particularly in this moment where you see so many businesses gasping, trying to survive. Where does private capital and the different, capital elements fit for you in terms of the equities that businesses need today?
I think it's absolutely critical that we continue to make sure that capital is available to our businesses. It's really the core component of how we're going to continue to increase employment and ultimately be able to drive up wages. As we got punched in the face by coronavirus attacking both our health, but also our economy and jobs, making sure that businesses have capital to be able to navigate their way through the most challenging of times here. And private capital in particular has really stepped up to the plate in making sure that we get through some of these choppy waters in the short term, ultimately getting folks back to work. And I think it's going to be a key component as we rebuild our economy on the other side.
What do you think? I mean, today we're doing this program in part for a lot of reasons, because I'm interested in the nuts and bolts of an economy and what drives it forward. I've been fascinated by the private capital world for a long time. But what do you think the allergies are out there in politically and in the business world when it comes to investment, when it comes to the business environment? What are the things on your dashboard that you worry about when it comes to tending to that scene?
I think we often see politics get in the way where people want to have a conversation about what is the broader capital structure of a company rather than specifically looking at what is it doing and how is it impacting jobs. And so having worked both for a publicly traded company and a portfolio company of a large private equity investor, when I talk to the men and women who are working day in and day out, in particular in the manufacturing side, rarely do they care what the capital structure of the company is. They care that their job is steady, that they have a job, a good job, and they have the prospect for higher wages down the road. And so often I see the partisanship get in the way with conversations about what is the ideal capital structure for a business. I think what's really going on, kind of the boots on the ground side of this, is people want to see that investment being made in their hometown, in their community, so that we can continue to grow jobs and in particular drive wages up where we had a tight labor market before. And I think we're going to return to that on the other side of what is one of the most challenging economic environments we've seen in some time.
Well, one of the things that I've seen with the private capital area, I'm not an advocate, for that sector, but I've just sort of seen it is, a company runs into trouble. They may get, whacked by conditions or inefficiencies, competition globally. It may be different dimensions. And I think the controversy is that, private capital may come in and try to rewire that firm, help modernize it, help it. Now, I think, you can look at cases where that didn't work out, or you can look at cases where it was phenomenally successful. We're going to have the executive chairman of BJ's Wholesale on in a moment to tell us more about this. But when you kind of look at those stories in Wisconsin, because Wisconsin's one of the playgrounds of this, how have the stories lined up? Have you had good and bad, or have there been largely private capital and this investment has come in to reorient companies and grow them?
My connection's a little tight, but follow the question there. What I see is when investors come to the plate with private capital or any type of capital, they're looking to grow the company and get a return on that investment. What does that really mean? It means they're ready to come to the table to expand, to grow. In Wisconsin, what we see is number of companies that have been able to take advantage of that additional capital injection to invest and grow in the company. And the upside for employees is that that stabilizes their job, but often gives them an opportunity to upskill and to improve their wage scenarios. So as you see companies come in, or you see private capital come in with large investments, sometimes projects that were on the table for the previous owner, but they weren't able or weren't willing to kind of bet all the chips and go all in. We see private capital being willing to do that, take a really good idea that started, say, in Wisconsin or anywhere across the United States, have a sizable investment come in, and then be able to scale that not only regionally, but maybe across the globe. And we've seen great success stories of that in Southeast Wisconsin, in particular in the manufacturing space, where a large capital investment is required to be able to take what is already a good idea, scale it nationally or scale it globally to the benefit, in many cases, of the workers who are at those facilities who are now part of a larger and a successful company.
Now, there have been writers like Paul Krugman, Joe Stiglitz, who won the Nobel Prize, of saying, there's a downside to this, that, you do get layoffs in some cases. You do get massive debt that becomes a burden, and that makes that company, have a ball and chain around its neck, if you will, down there. What's your response? Because they're basically saying, look, we know that private capital, is part of the equation, but it needs to be tethered. How do you get the equities right between, the extremes of doing nothing versus those that say we need to regulate what had been previously unregulated?
People are very good at identifying potential risk. I think what I see time and again, though, is when investors come in with significant private capital, they're looking to be successful and to grow the company. And so we have entrepreneurs, this American capitalist structure where these entrepreneurs and private capital is coming in. They're looking to grow the company and succeed. That is the overwhelming impetus for private capital to come into play. People are good at identifying risk. Not always does an investment pan out in the way that the investor hopes it will. But by encouraging that, usually, and in the grand scheme, it plays to the benefit of workers across the scale. And so there are instances where there's some real challenging times, but the investors who are coming to the table, their ideas are almost always to grow the company, to expand it, and to give that opportunity there for workers. I think that the more that we have private capital coming to the table to be able to take some of these companies that may be not on the coast, and say in Wisconsin or throughout the heartland of the United States, provide that private capital and allow those companies to scale up. That's a real significant win for workers across the country.
Congressman, I want to jump to a question in a moment for you. We've got some questions in the audience that come in and you got picked. But I want to ask you just real quickly about the literacy of your colleagues about this subject. If you look at the private capital investment, there are a couple of reports that came out. You look at the private capital investment behind, pension funds, teachers' pension funds, other employees' pension funds. You look at the level of what has driven new investment, new job creation in a lot of states. Private capital is right up there and outperforming a lot of, most investment funds in doing that. And these are just data and numbers, but is there an awareness of that among both your Republican and Democratic colleagues, or is this something that's going to require some inculcation and some broadening and understanding? I mean, because there's a lot of stuff out there about private capital. I'm just wondering if folks know the numbers.
I think there's a real opportunity to improve people's understanding and knowledge of the numbers. If you just look at the state of Wisconsin Investment Board, which manages the pension for public employees in the state of Wisconsin, the most recently available data on the private equity side, they were receiving returns in 2018 of about 16%. That's positive for anybody that is vested in the Wisconsin State Pension Fund. And so I don't think that everybody's fully aware of how these returns are being generated, whether or not you are an individual that has a defined contribution or a defined benefit plan, about how these returns are being generated. I think there's a real opportunity to make sure that we're educating and informing members of the impact, the positive impact in many ways that this has on people's retirement accounts, but also on the jobs that are back home. As you drive around any given district, there's not a sign on the front that explains where the capital structure of that company was from. whether or not it is a public company, a private equity company, family owned. They're viewed as buildings and jobs. I think there's a real opportunity to explain that a lot of the private capital that gets injected into our economy is to the great benefit of workers and families all across the United States.
Thank you. Let's get a question from Shelley Porges.
Hi, my name is Shelley Porges, and I'm co-founder and managing partner of the $1 Billion Fund for Women and Beyond the Billion. We are a global consortium of venture funds pledged to invest more into women-founded companies all over the world. We work with VC emerging managers, as I said, globally, and we see other governments playing a critical role in the early investments into these funds, particularly those that are focused on diversity. Why is the U.S. government not doing more?
So, Shelley says both government money, so we'll have that swim along. But does government have a role in helping to create some of these funds, and can it swim along with what private funds are doing?
Well, I sit on the Diversity and Inclusion Subcommittee on the House Financial Services Committee in the House. We often talk about how we can find opportunities to make sure that capital is flowing to underrepresented minority groups, women-owned businesses as well. I think one of the strongest things we can do is put forward a highly competitive landscape that encourages investment that will flow through all businesses. The other benefit of what I think the questioner brought up is in the private capital structure. These groups can identify not only industry areas that they want to invest in, but also in ownership structures in business practices that they find attractive. So rather than a one-size-fits-all approach of public companies where the SEC is putting forward guidance on reporting, in some of these private capital investments where you have really thoughtful investors, it sounds like our previous questioner might fall in that category, they're able to identify best practices, making sure that the corporate governance rules of the companies that they're investing in match up with the ideals and objectives of the fund. And so that kind of entrepreneurial spirit, that kind of oversight of many of these investors is to the great benefit of the company and the employees that work there.
Let me just ask you just finally, you're new to Congress. I hope you're having an okay time. I hate to ask if you're having a good time, because if you say yes, you'll be in trouble with your constituents, I think. But I mean, I think broadly about the role, I think, we look to government a lot to fix problems, and sometimes government can meddle. And one of the questions, I know about the economy is that the American economy has largely been a laissez-faire economy, not lots of regulation on top of it. But we're at a time where there's a crisis, and the question of how do you get this, is this a moment during COVID where the impact on workers, the impact on communities, the impact on the environment need a kind of new social deal? And a lot of people grab the private equity and private capital because there's money there, there's resources there. You think there's a softer touch way to get the social contract right without necessarily over-regulating the economy?
I think what we're seeing, and the previous questioner, I think, highlights it, is many of these investment funds are examining their investment decisions. And by allowing each fund to make the investment decision that is right for them and right for their investors, improves us and moves us forward as a country. How do we make a more perfect union? And so I think what we don't need is heavy-handed government regulation from Washington, D.C., but I do think that there is a broader understanding across our society, in particular over the course of this summer, to make sure that the investment principles that some of these private funds are coming in with are thoughtful, and that they're reviewing that the companies that they're investing in are additive towards our country. And I think that is going to be a critical component. I think as we've examined ourselves this summer about where we want to be as a country, private capital is marching along with that and making some of their investment decisions and reviewing companies that are inside their portfolio to make sure that they're all working to create that more perfect union.
Well, Congressman Stahel, thank you for your time today and talking to our audience here at the Hill. A lot of interest. I've been watching some of the flows saying this conversation is long overdue. Look forward to seeing you in person when we can do all that again. But thank you very much for joining us.
Thanks for having me on.
My next guest is the executive chairman of BJ's Wholesale Club, a leading warehouse club operator with stores on the East Coast. I have to admit that I am a big shopping club magnet. I love to hang out in shopping clubs, so I need to go visit the BJ's. In 2011, BJ's was acquired by private equity firms and went through a period of transition before becoming a public company again in 2018. Executive Chairman Chris Baldwin is also a member of the Executive Committee of the National Retail Federation, the world's largest retail association. So good to be with you. I hope you're doing well wherever you are. And I do want to visit one of your stores one day. I've seen them, but I have not been in one before. But tell us a little bit about the journey that you went on, and I'm going to ask you because you were the CEO of this operation, and you're now executive chairman. So your understanding of the dashboard of these various elements is large. And I think what we're trying to do for our audience today is give them an understanding of how these pieces work together. So how did private capital matter so much in modernizing, in helping BJ's to survive?
Sure. First of all, Steve, thanks for having me. It's great to be with you and your audience. The BJ's story is, while I can make it complex at its simplest level, it is a story of investment and the opportunity to make that investment pay off. Overall, the company was public from 1996 to 2011. It was taken private in 2011. I joined in 2015, where the company had gotten a bit off track, and we were able to make substantial investments in the capabilities that were required to make the company a successful public company again. And in 2018, when we went public at about $17 a share, and we are continue to be a healthy, vibrant, and growing business in a very complex world we all live in. But in our case, the private equity industry was a critical part of making the investments necessary to get the company to be competitive again, and they were terrifically supportive through a very challenging time in our company. And on the other side of it, we have done very well in the public markets.
When you kind of look at the issue of private capital and how it fits and flows, what does it need that it doesn't have today, or are things just fine the way they are right now? Don't mess with it.
Yeah, my sense, Steve, is that just like all business models, the world we're living in requires all of us to step back and be a bit reflective about how we can make the world a better place. I think just like public companies and the BRT's work, private equity has done a very good job of attempting to leave businesses better when they leave them than when they got them. And in our case, I will tell you that our ability to grow has been a great job creator in the United States, and other private equity businesses are just like that. So I do believe that the world of ESG is critically important for not only public companies, but for private equity firms as well. And I've seen both up close and personally. And I believe both are attempting to make the world a little bit of a better place, because I think the situation we're dealing with in our country and around the world requires it.
I think one of the complex questions out there, I just admitted being a fan of, warehouse stores, right? That could get me in a lot of trouble. I also love, where I have a place, Chestertown, Maryland, which has lots of, little shops and has blocked warehouse stores, around that county. So I get that there are trade-offs in ease and convenience, and you can see the benefits of both sides. But when you sort of look at some of these big questions out there, you're on the National Retail Federation. You look at what's going to other large stores with brick and mortar operations and how they're going to survive. This is a transition point. It feels like a hinge point for lots of kinds of companies. And private capital does play a role in that. But I mean, when you look at it from your dashboard, just largely about how the economy is going to adapt to COVID-19 and where we're going and how capital can help those inflection points, because it's not going to look the same as it did 4 months ago. I would assume that we're going to see major changes. And some people are going to applaud those and some people are going to be angry about them. But how do you see it?
Yeah. We are certainly at an inflection point on a variety of dimensions. And I believe the private equity industry specifically, and the retail industry generally, can be a source of job creation in this country. And I believe, as an example, Steve, to give you some perspective, 32% of American adults started their working lives with a retailer. The way we talk about it within the NRF is really simply, we teach America to go to work. The place that I believe we can make a real difference is giving people an opportunity to enter the economic ladder. In our company, about a third of our general managers, probably the most important job in our company, it's certainly not the CEO. A third of those people started as hourly employees. That would be true for companies like Kroger or Walmart or Target. But if you think about the economic impact we can have on those families by helping them move along in their career in a role that generally doesn't require a college education, it's a great opportunity for people to move up the economic curve in our great country.
I want to go to a question in a moment, but I want to ask you, and this probably be unfair, how much pain do you think is ahead for us as a country with what's happening with COVID and what you see happening in the retail sector? 40 million people unemployed, debates about race, police brutality. I mean, this is a unique set of storms hitting once. Yeah. I mean, you're one of the Wizards of Oz, as I call it. You see a lot. Do you? I mean, most people say, "Oh, I'm optimistic," but I mean, be realistic for a moment. What do you see?
Yeah, the biggest economic concern I have in our country is the ability to get small business back up and running, Steve. As you think about it, if you and I owned a business, that was closed for the last couple of months, we'd be reopening sometime soon. You pick a date, to what are likely higher wages, what are likely limits on how many people we can have in our business. If we were a restaurant, we would be dealing with higher protein costs. And then we would also be dealing with the impact of the cost of PPE. As you think about retail, 96% of the retail businesses in the United States have less than 50 employees. But as you think about the consumer-led economy, 70% of GDP is consumer spending. We have a responsibility as business leaders, I believe, to help small business get back up and running. And I believe the government can also help in that regard. Because absent small business, this country will have more pain than it can endure. So in particular, I think the legislative focus should be on getting small business up and going, because that makes for a better America in the future.
I'm so glad you raised that. It's a vital piece, and I know it's going to be debated in these next 2 weeks, particularly in the Senate. We have a question for you from Cody Carbone, if I'm saying the name right. Cody?
Good afternoon, everyone. My name is Cody Carbone in the Office of Public Policy at Ernst & Young. My question today is, how do we build public trust in private equity? Do you think this is more of a marketing issue than a policy issue? Thank you.
Great question. Marketing issue or policy issue, building trust in private equity? I should have started my questions to you with that.
Cody and Steve, I think it's a very good question. I think this debate is best had on the facts. As a practical matter, a very large percent of public pension funds in the United States invest significantly in private equity. And private equity is also a very, very large job creator in the United States. There are certainly some bad stories in private equity, just like there are in public companies. But I believe if we have this debate on the basis of the facts, the conversation would be a good one. And the fact that so many pension funds in the United States so aggressively invest in private equity and the returns that I have seen from the industry would indicate that the returns those pension funds have gotten are in the mid-teens, the low to mid-teens, to be fair. We have made a terrific contribution to those folks around the country.
Well, Chris Baldwin of BJ's Wholesale Club, I really look forward to visiting you in one of those clubs when we're allowed to do that. I guess we are with masks and whatnot, but I would love to see you in person. Thank you so much for joining us today and for your insights, and I hope you'll be back again.
Steve, thanks for having me.
Great. And now it's time for a message from our sponsor, the American Investment Council. Please welcome Pam Henriksen, American Investment Council board member and CEO and Vice Chairman of Strategic Initiatives at the Riverside Company.
Hi, I'm Pam Hendrickson, COO and Vice Chairman of the Riverside Company. Riverside is a private equity firm which has spent the last 30 years investing in companies, small companies all over the world. Today, I am delighted to be joined by two executives from those companies. Chrissy Wostman joins us from N2Y, where she's the CEO, and Healy Lev joins us from Gobi, where she's the Chief Revenue Officer. N2Y is a company that provides K through 12 curriculum to public school teachers who have children on the special needs spectrum in their classrooms. And Gobi is a software company that provides tremendous automation to companies to help them with their environmental, social, and governance activities, as well as reporting. So something that strikes me about both of you is that you took your prior backgrounds, Chrissy, you as a public school teacher, and Healy, you in the real estate business, and you were able to leverage those backgrounds to create companies that have a real impact on society. Do you feel that your private equity partnership had an impact in some way?
Well, private equity, Pam, really helped us transform the business. Prior to that, we were a small family-run business, a lot of educators. So we had great products and we knew our market, but we were very reluctant to invest in sales and marketing. So once we partnered with Riverside in 2016, our first goal was let's invest in our infrastructure to make sure we're scalable. And then let's build the right teams and processes so that we could sell at a real enterprise level. Instead of selling teacher to teacher, we wanted to sell to a school district and implement not in one classroom, but across the whole district. So today, N2Y sits as a brand leader in special education, and we now serve school districts in all 50 states.
For us, it's only been about 6 months, but what I will say, there's a lot of great entrepreneurs in the world, and entrepreneurs have good ideas. And what helps transform a 3:30 a.m. good idea into a real functioning business is capital. Clear and simple. You need money to bring your idea to fruition. So without the backing and the financial help, needless to say, the intangible benefits of the advice, the strategy, the peer group, any idea for any business can't get off the ground.
So let's talk about growth, both in terms of increasing the value of your company as well as jobs. Healy, what has private equity meant for both of those things?
We're focused on growth. We're focused on growth for a few reasons. We want to have a successful business, but we also want to create jobs. We want to hire more people. We're also a mission-based company. So we work, as you mentioned, in the environmental, social, governance space. We help companies reduce their energy, reduce their water, promote energy and sustainability and green programs in the way that they operate, not just their physical, real assets, but also how they operate as a company, how they treat their employees, how they manage risk. So we'd like to think the more our business expands, the more impact we have on the world, really, as a mission-based company by providing our services and improving the way that companies function.
N2Y has always been focused on growth and getting into new schools. And of course, as Healy mentioned, you can't have growth without hiring new people. So it's been exciting for us. In 2016, we sat at 65 people, and today we're at 140 and growing. We've added brand new departments, marketing, inside sales, customer success. And I think as well as creating new jobs, it's been exciting for me to see how some of our long-term employees have new opportunities in departments that didn't even exist prior to our time as a private equity-based business.
So tell me a little bit, Chrissy, we'll stick with you a little bit about the community impact that your company has had and your partnership.
Absolutely. N2Y's mission has always been about helping more students. So we focus in on, as you mentioned, the special education community. So how do we help more learners achieve and enrich and empower them to live the rest of their lives to their fullest potential? We've done that by providing sales to new school districts. But another exciting thing that we've done with our private equity partner is really optimize our product development process. So since 2016, we've delivered 5 new solutions to the K-12 special education market. So this is allowing us to reach new classrooms, new teachers, new therapists, new homes, students that we've never addressed before. So it's very exciting.
Obviously, we're in the middle of a global pandemic in the world. So what's been your experience working with private equity through this very difficult time? Healy, start with you.
Certainly like nothing I've ever seen before, but one thing that's really comforting, at least in our experience with Riverside, is it feels like a family. And one thing, when your company is struggling or nervous about these new challenges or how it's going to impact the business or how it's going to impact the employees that work for you that depend on this job to feed their families, it's a lot of pressure, it's a lot of stress. And it does help to have that community, to have those peers to kind of commiserate with, or to just feel like you're not alone. So one thing is just the comfort in knowing that we're all going through this together. And then the second thing I'd point out is that having an advisor like Riverside, having access to the brains within private equity that can coach us how to better get through this, or what to do, or what our peers are doing, or even just assuring us that we're going to come out the other end of this okay, is really, really meaningful.
I agree with Healy. Being a part of a private equity group gives you access to so many different leaders of different businesses to share ideas and resources and really support each other during these times. I think our current private equity partner has been really supportive. When we shifted gears in March, when schools shut down across the country, we knew we needed to stop focusing on sales and focus on support, on how we can make sure that special education students could continue their learning outside of schools. So we offered our solutions for free to our clients, to people who have never heard of us before. So it was really great to see private equity back our mission that way.
Chrissy, just sticking with you for a minute. Both of your firms decided to partner with private equity, but did your perception after that partnership, which has been a long time now for you, Chrissy, change? Did you change your perception of private equity?
Well, I can say honestly that I was scared of what it meant to be a PE-backed firm, not having any real experience with that. We were a family-run business, as I mentioned before prior, but it was great to see my operating partner and our deal team really step in and right away calm my nerves by spending time with me, really taking time to understand the business, my team. We even went into classrooms to watch our solutions in use. So they really were behind our mission and passionate about it. And I think I'm most proud of the fact that our partnership together, we were able to kind of maintain our mission that everyone can learn and everyone has the right to the best education, and really hit high growth marks without having to step away from our mission.
I think the concept of venture capital and private equity was always this elusive entity that was secretive. And what we really found during the last 6 months of our partnership with Riverside is what's on the other side of those doors, private equity, are just human beings. They're like-minded human beings. They want to work hard. They want to get returns for their investors. They want to see companies grow so that we can help our communities and promote job growth. And it's nice to have had that completely disarmed. When you sit down with these people and you realize they have great advice to offer. They want to help your small business be successful. They want to give you the tools, the network, the peers, the advice, and of course the capital to make your business realize the vision that you had set out when it was just that 3:30 a.m. idea.
Thank you very much to both Chrissy Wosman from N2Y and to Healy Lev from Gobi. N2Y and Gobi are just two private equity stories out of many. In fact, last year, according to the American Investment Council, private equity invested over $700 billion in diverse communities and industries across the country, helping to support nearly 5,000 businesses. If you want to learn more about private equity in your community, visit investmentcouncil.org.
Pam, thanks for that exchange. We've heard from policymakers and business leaders. Now it's time to hear from another set of experts, academics who understand the nuances of private equity. Greg Brown is professor of finance at the UNC Kennan Flagler Business School. He's also research director at the Institute of Private Capital. Francesca Cornelli is the dean of the Kellogg School of Management at Northwestern University. She is also professor of finance and the Donald P. Jacobs Chair of Finance. They're both highly regarded scholars in the fields of finance and business management. Welcome to you both, and I'd love to make this a conversation. Let's make it, like The View on private capital and where it is. But would love to kind of, give you a challenge here and just open up. Our economy in the United States has been hit by the largest crisis, the most significant crisis since the Great Depression. And so I'd love to hear, Francesca, how you put it back together.
Well, I think I think it's important not just to invest money, but invest money with a plan. And also, I think a lot of people are saying a lot of sectors coming out of this crisis, it means also to reinvent, to change the business, to innovate and take different angles. And that is why you need particularly smart money in the sense of capital that comes with new ideas, a new angle, an ability to actually invest. It's not just a recovery, it's actually ability to change strategies in many cases.
Greg, how would you respond as well? Because I know you've looked at these component pieces, and particularly private equity and what it does. Do we applaud that and say, hey, more? Are there other elements of the nuts and bolts of the economic system that you think need to be prioritized in this time of stress?
Well, I think the important thing to understand is that there's going to be a lot of different solutions that are needed for different companies. The small companies and particularly dislocated industries are going to need things that are different than large public companies. The private capital world is particularly well situated to help companies in times of need. There's a whole turnaround aspect to what a lot of private equity companies do. So I expect that there's going to be a lot of deal activity. There's going to be companies that move from being public to private, but there's going to be private companies that realize they need the expertise that private equity-backed investors bring. And I think there's also going to be pieces of public companies that come out and need to be restructured. And this is something that private capital has just got a good track record in doing.
Thus far, Greg, and I don't, and Francesca, I'll come to you on this too. We've sort of dealt with private capital as sort of a monolith. There are different kinds of companies, different sorts of investors. You just mentioned the expertise that comes packaged with some of this. What are the best examples of what you would call, AAA private capital behavior versus those that are not AAA? What characterizes the best form of private equity investment and those that we wouldn't be proud of? Greg?
So maybe I can
Francesca?
start. Oh, you're asking Greg, sorry.
Yeah, go ahead, please, go ahead.
No.
Okay.
I have done some studies, for example, that look at the fact that we looked at the type of partners or people working from private equity, and we show that during recession is where the funds that actually perform better in the long run are the one that increase the number of people in their team with more of operational background and actually have more of turnover in the operational background. So in other words, we do see that, as you're saying, the AAA cases are people who are able to renew themselves, put more focus on the value creation rather than the financial engineering, especially during recession, and also are able to bring in new people and therefore not rely only on how's it been done so far, but different way. And that is the right way. While the people, the funds that don't necessarily perform as well, they're not so successful, is when you are not as able to renew itself, because then you can't bring in the company, in the investment, this special expertise.
So you're saying the crisis matters. Greg, your thoughts on this? Does crisis get all of the players to respect each other more, work together more? Does the knowledge and what's needed for an economy, sort of blossom better in time of crisis like this?
Well, it probably causes people to consider things that they wouldn't have considered otherwise in terms of what are going to be new business models, what are going to be new markets. We certainly know there's entire industries that are going to be facing a very different landscape for their goods and services. And so to the extent that you can bring expertise to the table to solve these problems more effectively through the governance structure and the operating structure that private capital has, I think that's a very valuable aspect of private equity.
Now, you've just done a study on the effects of private equity on corporate productivity and the returns for investors, Greg, and I was looking at just this week that there was a study that showed that particularly for state investment funds, pension funds, et cetera, that those private equity funds did substantially better for nuns. What's going on there?
Yeah, so we've just looked at what historical returns have been in private equity, and what we found is that there's been pretty consistent excess return from buyout funds over what we think is an appropriate public equity benchmark. And this is something that's been in the press quite a bit the last few years, because people sort of feel like maybe returns have been lower in the post-crisis period. But what we really found was that there was sort of a lull around the great financial crisis, and then returns have picked back up again. So it looks like the excess returns that investors get from private equity are actually more durable than a lot of the discussion would lead you to believe.
Francesca, you have studied the globe, the world, lots of different systems. And I think one of the questions that always comes up, and it does for me too, are there examples out there that we should emulate, or are there examples out there we should run away from? And when we look at the way capital flows, and right now we have huge infrastructure needs. We have large companies, as I was just discussing with the executive chairman of BJ's Wholesale Warehouse, that there's going to be a large capital need in this country. Is there somewhere else that does it better, or is the U.S. system as it is now largely okay, or how would you tweak it based on a comparative basis?
No, I would say the U.S. is one has been doing the best in terms of private equity, because that some of the best return has always been seen as the quality, so that in periods of trouble, the capital has moved back to the private equity in the U.S. versus others. I would say, however, one of the things is even U.S. private equity fund, when invested in developing market, one of the biggest difference is that there's no access to debt. And therefore the leverage cannot be one of the major components. And yet they still manage to deliver excess returns. So in a way, the message is, the experience from there, even from the same US private equity fund with some funds specialized on developing, is that even in absence of recourse to debt, they could achieve excess returns.
Let me ask you, we're getting pretty close to the end of our program here, but I'm asking you a big kind of slightly metaphysical question. I hope you'll forgive me, but it's one of these things that when you look at what changes, what disrupts an economy, what disrupts workers and jobs, some people blame trade, other people blame technology. And recently I've done programs on smart cities, the Internet of Things, AI, automation, which is all coming online. Private equity drives some of this, but lots of investment drives this. Change drives this. And I guess my question to you is, as we try and advance as a inclusive, holistic economy that moves forward rather than falls backward, I just want to put you both in charge. We know the capital story, but how do you kind of square the corners so that the economy moves in a place where it trusts capital rather than fears it, that it can embrace change and the reinvestment that it requires rather than fears that? Is that a silly notion? Greg?
No, I don't think it's a silly notion. I think this is where policy is so important. So, really the foundation of our economic system is we want to set a playing field, and hopefully it's as fair a playing field as possible. Let businesses compete. There's going to be winners and losers, and then the role of policy is to make sure that everyone comes along. And I think this has been a big challenge for policy because the world has become so dynamic, and it's because of trade, it's because of technology, all the things that you mentioned. But this is why policy is so crucial.
Before I jump to Francesca, do you think there are elements of public policy that need to shift so that this equation is healthier and smarter?
Well, I do. I don't want to get off on a tangent with regards to
you get 30 seconds. You get 30 seconds for a tangent. You get 30 seconds for a tangent.
But I do think we have to seriously examine the fact that there's been a growing income gap and wealth gap in the U.S. and think about what are policies that are going to allow more people to participate in the economy. I am a strong believer in education, as you might imagine. I'm an educator, so I think things that we can do to increase access are going to increase opportunity for people, and then people are going to feel better about their own role in society, being a more fruitful contributor.
Thank you. Francesca, let me give you the last word. How would you kind of put these pieces together? And again, private equity is a key piece of that equation. But how do you think we can kind of get to more trust in the system and kind of leaning forward? Because I know there's a lot of fear out there. Believe me, I hear it every day about the fear of disruption and the impacts that this is making. So I want to, kind of check that box off and say there are problems out there that need to be fixed. What are the steps you think we can take to make that ecosystem of the economy healthier and smarter?
So I think one of the things people really have to let a bit go is the idea that they have to monitor every result and step. And I think that is part of the fear, but to a certain extent, that would be one of the advantage of the private equity, that you don't have to keep quarter results. Therefore, you can invest for the long run and look at the final results. I think too much people look at one case gone badly or even 10 cases gone badly, and therefore try to repair by looking at what is happening in the middle. I think people need to start accepting that disruption happens, and disruption during the lifetime of an investment matters, and started looking at long-term returns and large numbers. But the sense that you can control by looking at short-term numbers is exactly what's bringing to the short-termism that then we criticize in the stock market. So that is not the solution.
Well, I want to thank you both. I mean, I would love to spend an hour with you and go on a much deeper dive than we have today. Greg Brown from the University of North Carolina Kenan Flagler Business School and Research Director of the Institute for Private Capital, and Francesca Cornelli of the Kellogg School of Management. Thank you both so much for joining us. Hope you'll come back because we're going to be monitoring this question of how I kind of want to do a series of programs, but what does a healthy economy look like? How do you get all this moving right? What do we need? This is a time a lot of companies are flat on their back. So I appreciate your time and thoughtful insights into your research. Thank you so much.
Thank you.
That brings us to the end of our program. A big thank you to the American Investment Council for their support and to all of you attendees for joining us for this very important discussion. If you missed any part of the conversations today, head over to our website at thehill.com/events, and we will have the entire video from the program up there shortly. I'm Steve Clemons. Be well.